What's happening, guys? And welcome to another Sunday Scan. This week we have Stan with us, so we have our Sunday Stan session. So thank you for being here, and I'm excited to get into everything, Stan.
Yeah, absolutely, Chris. Thank you. Thank you for having me again, and let's make it a great Sunday stand session.
Yeah, let's do it. So tons to talk about today. So let's get right into it. Very volatile week in the general markets, and that's usually where I'm spending most of my time. I look at things from kind of like a macro view, and then I try to focus in on which markets is that really playing out in, and that's something that we'll get to a little bit later on. But you have like the general markets or the large caps, and then you have the small cap market as well. And what I'm noticing is that a lot of these same themes, they're just expressing themselves in different parts of the market. And so we've seen things with oil headlines, with geopolitical headlines, and you have that show up in different areas. It could be defense stocks in large cap land, or it could be in like small cap oil runners. And so we just have a huge range of things that are moving right now, and there's a lot of opportunities if you know where to look. And so one of the benefits of having different styles on not only Scan, but also in the Investors Underground room is that we can kind of see which parts of the market these are popping up in. And then if you have a strategy for a certain setup or a certain part of the market, then there's just no shortage of opportunities right now. So starting with some of the larger cap stocks, we've really seen a change in the VIX environment this past week. I talked about it a little bit last week about how during periods of low volatility, you basically have people only hedge when they need to. And so there's very little hedges in the market, very little volatility, very little put buying. But then once you start to have a bunch of events or a lot of things, headlines all hit at the same time, everybody rushes to hedge at the same time. And that is how you get those spikes in VIX. That's how you get those spikes in put buying, and you get those general market flushes. And so I just wanted to touch on when you transition from a low volatility market into a more high VIX environment, you have usually two types of days. And those are like trend days in the index, or you have chop days. And so if you're coming from a period of low volatility and then there's a bunch of headlines and you get into a period of high volatility, you usually have a downtrend day in things like SPX or SPY. And that's basically as people are selling from the headline, plus they're buying VIX, plus they're buying puts, like everything works in the same direction. And then usually what happens after that is that you'll have a day of a chop. And so you might still have the negative headlines where people are still selling, but VIX is already bought and that ball is trying to like melt off. So you have like two forces going against each other. And so you get that kind of chop day. And those can be really difficult days for options traders when you don't have things trending cleanly. And so that's just something to be aware of. And as we have markets where you have those chop days, that's where if it's within your playbook, an options trader, like I'm mostly an options trader, but I will go into small cap, the small cap realm if that's where there's movement and there's cleaner moves than in options if there's a choppy day in the index. And so when there's things that are moving like small cap oil names or defense stocks or things like HUBC or PRZO related to the Middle East conflict, you can have these huge ranges, and it's basically just pick how you want to express those trades. How do you want to attack those headlines? And so that's where if we start to have some choppy days in the week coming up, I'm going to be focused on small caps, and I'll be able to express my trades there. So that's basically what I've been noticing in the market. And Stan, you've been seeing the same headlines, the same things, and you've seen them in the small cap realm. So can you just share what you've been seeing?
Yes, absolutely, Chris. So as you mentioned, the the market's volatility is still present. Overall, we're staying a little bit heavy on the heavier side, and so we're seeing some nice unwinds across some names that we've tracked. As you mentioned, CVNA, it's back to that 75 level that we spoke about a few weeks ago, and then also. Even on the mid cap range, some of the smaller ones, we've had some nice unwinds into with CGC, also SOUN, and then we also had the I believe it was CXAI off the in the small cap land off the 650s, 650s, etc. So definitely seeing the overall market volatility present in small cap land as well. And then to your comment about the war headlines, as you pointed out, we did see INDO and HUSA have some pretty notable moves on Friday. I remember from the first time, or not first time, but the last time the oil sector moved there, with similar headlines. We had names like IMPP, NINE, 9, GBR. So these are all going to be on watch for sure for the upcoming week, and then we'll go into them a little bit more detail later. But in terms of the small cap market, it's been absolutely on fire. At least for the things that I'm looking at and trading. I don't think I've traded this many tickers so bunched up closely together in probably the last 3 to 4 years. It's been a lot of opportunities that allow you to express the way you trade in many different ways, right? If you have multiple strategies, if you have multiple ways of trading something, this is the market where it offers that opportunity for you to take trades after trades. And it's the type of market where spending time being wrong is one of the worst things to do. As far as opportunity cost, you are now focused on the wrong ticker. You miss the next one that's just around the corner, etc. But we've had good names from tickers like DXYZ and RENT to something like a former tickers that we've seen, MSGM or LASE. Or even something sub $1 like TPET that we had on Friday, which was I know some folks took the long idea into Friday exhaustion's move, but then it offered a good short after that blow off move. And then we've also seen some trappy action in the small cap land as well. Tickers like AUUD, something like MDIA, CADL. Throughout the day, they would constantly, swipe and then stuff, but then hold a certain level, then swipe again, stuff, hold a certain level. So a lot of trappy action on some tickers there, and the best way to approach that is you either avoid if you know you're not good at the volatility and the trappy action, or be a trader around them, and when you nail the move. If you're front side, that will require proactive covers until something shifts the sentiment, and then you have people that were caught offside. Now the inventory is above and it's higher and it's going lower and lower. So definitely good market for various type of traders out there for various strategies. It's the type of market, the volatility, it could be seen as forgiving as well, as long as you don't fight something on the wrong side for too long. And then ultimately it's rewarding taking the opportunities and then moving on. I haven't seen that many all-day faders throughout the last couple of weeks. There's been a few. LASE was one of them, but for the most part, what I've noticed is we have a lot of these pre-market runs. It opens, maybe it exhausts first 5-10 minutes, then it fails, but it just lingers in a steady channel throughout the day until sometimes they may squeeze into end of day. We saw that with ADIL and WAVE, or for the most part, they just range in a tight channel and then do nothing end of day. So I've seen a lot of that. But overall, great market. I think to be a trader now, and again, as I mentioned, there's just no reason to fight things. The next opportunity is right around the corner, and if you have a clear mind, if you haven't been bent up, you haven't been aggravated, if you're able to take advantage of the opportunity, this is the market, at least for me, to where I step in the pedal.
Yeah, and I think that that's just so important to really have that trader mindset where it's instead of forming this, big bias on something when so many things are moving in all different types of directions. For me, it's just about finding what is the path of least resistance. What offers the easiest trades with great upside, with controllable downside, and just focusing on those areas. And so instead of getting caught up on a particular name, and like you said, you might be stuck fighting some name for like 6 hours, and in that same time, like 5 or 10 other things have offered, layup trades, and it's just not worth it to be fighting something in this market. And so, have a thesis, but then keep your eyes open on other things too. And if something's not working out, move on, come back to it a little bit later. Even trades like SOUN from, a few weeks ago, that's been trending down pretty steadily. And so sometimes it's like when people forget about them, that's when like the move actually comes. And so setting price alerts or just keeping things on your radar, you can win that fight another day, but it might just not be the day to figure something out when so many other things are moving. So yeah.
Right. And actually, right as you mentioned it, if we can do if we can pull up a chart real quick, I think what you mentioned really resonates with ACB right now. We can see ACB. It's had its move. It's consolidating, and I'm only interested in if it goes and it breaks outside of this channel. Anything in between here, for me, it's of no interest, no edge. So this is, as you mentioned, a great type of trade where you can just set some price alerts and don't dedicate any mental capital to it or time until that hits.
Yeah, and I think CGC, very similar chart setup, or at least the same theme. And it's kind of like, everyone was talking about this, a couple of weeks ago. And now that a lot of other things are moving, maybe this starts to settle in and slowly unwind as people forget about those names. So these could be really nice, clean trades. I mean, if we look at the failed follow through kind of idea where, if you're looking at those peaks out, it's struggling to break this level, and then it just starts to fail, come back up, test, fail. And it's really just a series of like connect the dots. If you were to put a dot at each of those key levels, is it, trending one way, or is it, going back and forth? And you really want to find things that are just cleanly trending, and then picking those spots where it runs against resistance for an entry if you're short, or if you're doing puts, and then, letting it ride down there. So yeah, I totally agree. Yeah, and then a couple things that I was watching over the last few weeks, we saw some good moves in things like gold. And so if we could pull up GDX, this was like the gold mining index. And so you talked about how, just the environment that we've been in, where you have inflation coming back up, you have geopolitical headlines, you have, high liquidity, you just have all these things moving. These have been the environments where gold has done well in the past. And, crypto has taken some of that, some of the spotlight from that traditional role of gold. But I think you're starting to see, especially with the conflict headlines, gold starting to really stand out in this market. And GDX being the gold mining index, that's a way that you can play that. And so that's just something to keep on your radar. And, like when NVIDIA and SMCI were having really good runs, we would see these, good, clean trends, and then these sharp pullbacks on like a Friday. And we would see that, during the run up when we talked about, the options getting ahead of themselves. And basically on Fridays or later on in the week, a lot of times you get that reset day. But that doesn't mean that it's bearish necessarily. It just means that, these moves that are kind of starting to go a little bit parabolic, they pull back sharply, but it's about what happens after that pullback. Does it, stay heavy? Does it pull back and, have that failed follow through setup where it tries to reclaim and it can't, and then it's just slipping lower and lower? Or does it soak up and then starts to trend and then breaks out again? And so is it failed follow through, or is it follow through? And I think in this environment, we're likely to see some follow through on these, over the course of the next couple of weeks or couple of months even, depending on that. And then the other thing that I want to touch on this past week was things like JP Morgan, JPM. they released earnings, and they were one of the first big banks to really kick things off with that. And so, a couple things, just like a general, thing about banks is that a lot of times they make their monies in environments where they have to pay just a little bit to customers, and they can charge a lot to lend out to people. And so at the beginning of like an inflation or a rate hike cycle, that can actually benefit banks somewhat, because you deposit stuff and they're paying you 1%, and then they can charge 6 or 7%. But as the cycle goes on, now they have to pay their customers 5%, and they can only loan out at 6 or 7%. So their margins get compressed. And so I think that's the point of the cycle that we're in, where you're starting to see some of these financials, they're having some pullbacks, I think, from that. And then another thing with banks or financials is that they hold so many bonds on their balance sheet that when bond yields spike, that means that bonds are dropping, and so their collateral or the value of those bonds are really dropping off too. So I think we could be coming up to a point where financials are going to have a correction, and I don't know if it'll last, if it'll be a quick thing and recover, or if it'll be a sustained correction. But XLF, that's the financial index, and that has all the big banks in there and everything. And if you start to see that pullback, that's a huge component of things like SPY. And so, I try to identify what are like the key things that move a market. And if you have one of these pillars, like, XLF or the big banks, if those are starting to pull back, then that can definitely take the market down with it. And so, keeping that in mind, we also have to pay attention to things like big tech, the Magnificent Seven, and the AI name. So those are just a couple of things that I'm really watching to see if do all these start to trend down, and do all of them have a trend change, or is it just one or two of them and they'll kind of take turns then re-soak back up. So those are basically like the kind of the trade recaps, or like the things that I was watching this past week.
Very good. Yeah, I mean, I think as you've discussed the gold. The gold aspect, I think that has been a really nice idea that we've seen this in the past as well, right? So it's something that we could use a previous blueprint. And as far as some of the trades that I wanted to go over the past couple of weeks, or just at least over the past week, and a concept as well is now we're in a market where being a trader is rewarded, and something like a DXYZ is a trade that I took, I believe, on the 9th, this day here, and it offered a great opportunity to take advantage of the move. However, the reason why I wanted to bring it up is because even though it was a decent trade, it's still not something to where I'm able to scale in large size or have large conviction, or really look to sink teeth in, because of the behavior of the overall stock, right? You have this that it's been building over a few days, and now we're back into where this base was. But if this catches and volume comes in, this it could get pretty serious very, very quickly if you're not careful with size. And since that day, it has been a good failed to follow through type of move. And essentially, I had some a position here right out of the gate, and covered some into this congestion zone. And then it went lower, obviously, after once it bottomed out at 11:30. Then I wasn't really interested until we rechecked in with this congestion zone. And we also had a question on one of the videos on YouTube to go over, what's a congestion zone, what exactly does that mean, and this is something that I look for in determining where. If this area fails, then I would be interested in rechecking with this area, maybe exhausting over it, and then look to rescale for on the way down again. So essentially, congestion area is just some sort of a period in time. Obviously, the longer the congestion area, the the more volume it turns, the stronger it essentially of a level it becomes if it fails or breaks out. But you can see this DXYZ essentially oscillate in this what is it, 70 to 77.50, so 71 to 78, let's say. So in the $7 range, it's oscillating here for about 30 45 minutes, and then once it fails, it fails to follow through, and you see it unwinding further down the road. So for me, where it comes of importance is what happens when we go back in and recheck in with this congestion area. And you can see it right here. Rechecked in with the 71s, it failed, but then it came right back over VWAP. It exhausted over the 78s level. And then once it rechecked in again, and it failed VWAP, and then again, once the 71 level failed, it continued to go lower. So this is one way that I use congestion zones. Essentially, it's a way for me to look at, where's a lot of battling going on. Was there a lot of volume exchange? What's the indecision looking like within that channel? And then once it breaks above or breaks below, then I may be interested, but I'm not going to be trying to figure out which way is this going to go while we are in the middle of creating a congestion zone. So DXYZ was one of the trades. The other one, RENT. So for me, I treat these pretty much the same. DXYZ and RENT are the type of tickers where it's nothing I can sink teeth in. It's something that it's nice to have. If you nail the move, if you nail the trend, it's great. But it's absolutely nothing I would recommend for someone building an account or looking to improve their trading. Overall, these DXYZ types do not provide much value in learning. But as far as RENT, I traded it over here on this day, and this is also another good example of a congestion zone. To loop it back into the previous ticker, so you can see the DXYZ, we had a similar setup below VWAP congestion zone, and then it failed. And this one, RENT, we had the opposite, which is above VWAP. It has its little congestion zone, and then it goes higher. So RENT essentially started in over here within this exhaustion move, and then once it held this 15s level, I covered it all, because it's nothing that again, if it would have broken down, it should have essentially done it by now. And if it doesn't break down, then everyone that was expecting for the same move that I was waiting for will be on the wrong side. So I would much rather readjust my risk exposure, and then if it fails, then I can re-add and go back into it. Or if it breaks out, then I can react to another move and then go from there. So once it cleared out this congestion zone, then you can kind of see how this 20s level became important, right? You can see it fell from here, almost right over here, and then even towards end of day, the 20 level gave some trouble. And then also on Friday, you can also see how the 20 level is still playing an important part of this ticker. TPT was the other one that I wanted to go over, and this is something that nice idea. I know a few people that took this long in the room, and then also a nice little liquidity trap setup / blow off type of setup over here. You can see the big volume, 206 million on early April 2nd, and then it went down to 20 million. So just a 10 of that, And then once the price held, it slowly started gearing back up. And then we had a nice exhaustion move on Friday as well. So TPAT, I was watching this on Friday, and essentially started into this exhaustion area. Once right around noon, when I saw this peak, and then when it absorbed, that's when it pretty much came on my radar. And then as I find stocks that are just turning and doing the same thing over and over again while holding and absorbing higher, there's really no reason to be fully involved in this area. I mean, if you can try some of these pops, but the moment it absorbs, you can clearly see the higher lows that it's creating. So once we got that nice exhaustion candle, I started in over here somewhere into the 62, 64s or 66s, somewhere around this area. And then it just covered along the way some rescaled. I fumbled the rescales, unfortunately, right? I think it rescaled right over here. But in either case, it was an okay trade. The overall idea was, again, looking at the setup as a liquidity trap and then waiting for the day that the blow off comes. This one will remain on watch for me, at least into the coming week, just to keep it on radar, because I think anything versus the 60s level might be a good opportunity to take a good opportunity to approach. And the last one that I wanted to go over was LASE. Again, nice. Like I said, this market has been really active lately. So a lot of good opportunities. I think it was this day here on the 9th. So this was a nice all day fade. Essentially, this was one of the best all day fades that I saw last week. We had this nice morning, opens up, morning rips up there pre-market, and then essentially at 9:30, we had that nice 30 or whatever 50-60 cent candle rip right over here, and then after that it just it failed to get above that 430s level, and once that 430s level failed, then we had the next base of 350s, and from that point forward, you can see how the 350s base essentially was acting as that top throughout early morning, before ultimately by noon or so is when it started failing. But like I said, I had some starters over here, and then covered some and just rescaled along the way on pops. I didn't make it all the way until end of day. I think I covered somewhere around right here maybe, but we'll put up some charts so we can see what the actual trade was. And as far as some of the trade recaps, that's really what I wanted to touch on from last week, Chris. It was mainly a lot of, we've had a lot of opportunities from various aspects in trading, something like DXYZ that maybe or RENT, a little bit more, it's a little bit more skippy, a little, obviously wide range. If that's not comfortable for you, then you can trade something like LASC or something like MSGM was another trade that we had, or then even something sub $1. So to me, it feels like a market of a buffet of offerings. There's a little bit for everyone.
Yeah, a ton of it, and those are great recaps. And just like this commentary, especially while trades are playing out, this is something that you go over like during the midday study sessions, where you'll be trading some of these things live, and people will be asking questions like, okay, what about like this zone, or what are you looking for on this fail? And it's so valuable to be able to have people who have a good read on a stock as you're trading it, to either have live coverage or answering questions in real time. So that's a huge benefit of people who get to see those mid-day study sessions. And I think everyone gets a lot of value out of it too. So excellent. And So let's get on to the t-shirt winners for the week. We have a couple of them. We have Dr. C Dub, and then we have BTO 9273. So if both of you would email webmaster@investorsunderground.com, you can claim your t-shirt. And then we really want to encourage people to also ask questions in the comment section, and we will answer them. And we might even do in an upcoming episode like a 5 or 10 minute, just answering questions from the comments, because these videos, the whole purpose is to provide a lot of value to people who are not yet inside Investors Underground. And you can see, what are we trading? What are the setups? What do we mean by this term? So if you have any questions or if anything's unclear, ask the questions and we will get to them, because again, we want to provide value to you. So leave either your key takeaways or ask any question that you can think of in the comment section, and we will get to it. And then as we move on to the next section, I have to do a disclaimer that neither I nor Stan are financial advisors. These are not buy or sell recommendations, and this is for educational and informational purposes only. And so, Stan, what are you watching for the upcoming week, and what's your game plan around it?
Yeah, absolutely. So let's see here. I have, we'll start with CVNA, as that's pretty much my only large cap that I'm watching. So CVNA, this one for me, Chris, is something we've discussed. Obviously, we've had CVNA on watch. I think it was from down here, even below, before this gap up, whenever it was. But we've discussed this 75 to 85, whatever 85 type of channel for quite some time now, and here we are at the lower end of this channel. So for me, what I'd look to do with CVNA on Monday and this upcoming week, I will look to see how the 75 area reacts. And then if the market agrees, if the market stays heavy, if there's volatility, if it continues to go lower, then I don't mind rescaling pops along the way on a trend, versus VWAP. So you have a day where VWAP stays heavy, something like we saw obviously on Friday. This was a nice little setup there, but anything that VWAP stays heavy and then pops, with keeping that 75 level in mind. Obviously, if we gap up and keep going, this is what creates these congestion areas. So for me, I'm only interested in above 85s or below 75s. So
those ranges or those congestion areas, it's really the establishment of a range. What's the high point of that range? What's the low point of that range? And then usually that's an area where action happens. And so as it tests the lower part of this range, we'll see, do buyers step in and do they kind of save it? Does it swipe back up, or does it actually fail under that range? And now you have a downtrend. So instead of a congestion zone, you now have it underneath that, and now it's a new trend. And yeah, we've been watching this one for a while, and kind of the thought process was that this will hold up as long as the market holds up. But if you start to see some of the option activity kind of change, or if you start to see the market get more volatile or bearish, like we've seen it over the last week, not necessarily, long-term bearish, but just a period where you had a lot of news, then things like this they require a lot of things going right for them to stay up. But if those things start to not go right, then they can come down. And if you could pull up KMX, that's another kind of like the used car theme, and you can see how this did after earnings. So I try to keep that in the back of my head, if you're looking at like a theme or a sector. So those are great thoughts on CVNA, and I'm watching a similar thing, Stan.
Right. Yeah, no, absolutely. And another thing to keep in mind, obviously this would be a perfect time to create a nice little bear trap. So just because if Monday it opens and it flushes down 80 cents to $1, I'm not going to be too trigger happy and start to chase this. It's more so I want to wait for when the sellers show up. Everyone that was buying in this congestion area over here that finally gives up and says, okay, this is maybe not going to 120. So CVNA, that will be the game plan for next week. We'll know more on Monday, but again, it's something that it does have other dependencies such as the market, news headline, etc. The next one that I'm watching is this TPET. Nice little trade there on Friday. I do like the daily chart. Like I went over just a little bit ago, a little liquidity trap here blows out. So now on Monday, ideally, this gaps down a little bit, and then maybe it comes to recheck in with this pretty much your intraday zone. Anything versus this 58 or the 60, I would be interested in, or if it exhausts over 60, that would be great as well. And then look to join the trend lower. The next ones that I haven't watched will be INDO along with HUSA. And these are the ones, right? So I have them on watch mainly because they're in the spotlight right now. There's the volume, there's the liquidity. It provides the market to where I'm able to get involved. But if these continue to grind higher, again, these two also have other dependencies on them. Any more war headlines or anything that comes from the market overall, we may see it getting impacted in some way. So ideally on Monday, INDO, anything versus this 560s, 575s area would be ideal. And then look to scale lower as long as the trend confirms. HUSA, similar. HUSA, obviously you can see this this 250s area being a little bit of a trouble, and then you have your bottom side there in 230. So anything within this range that it tries and then it fails, I will be interested in. The next one that I have is a CADL. CADL, this one, I traded it. Let me see, which day was it? I think this day, maybe on the 5th. I'll see if I find the trade. I'll if I find the chart, I'll put it in the video. We'll see which day. But in either case, the reason why I'm watching this is any sort of 8s, 850s, 9s. That would be great if we can get some sort of an exhaustion. Again, this one can get very trappy. It can thin up really quickly. So it's something to where you need to watch your sizes on the front side. But any sort of shove against this range, obviously higher the better. We'll look to scale for back to low 5s, and then ultimately eventually to the lower singles there. And let's see here. MSGM, I believe the last one that I have is this MSGM, and this one had a nice little clear out move there intraday, right over here on this day. I believe I took part of this. So right now I'm just watching to see, as far as some of these ranges, if we get back into the 315s, or ideally anything lower than 270s. I don't know what's going on with these charts. And there you go. So anything within this range for me is just this indecision time period. But if we get back up towards 3s, I'll get interested. Or if it remains heavy, up this 260, 270s versus maybe red to green level, I wouldn't mind participating in that as well. And that pretty much wraps up the my watches that I have for next week. Chris?
Excellent. And then, yeah, I'm definitely paying attention to those too, because if I am more active in small caps during the upcoming week, then I definitely rely on people like you and Nate and others in the room who have great reads on the names, and then I have the setups in my playbook, so I can just basically know where to turn my attention to. So it's hugely valuable for me as well. A couple of watches that I have on my radar this week are JPM, and so I talked about this a little bit before, but yeah. so this is like the bank sector. They had earnings, and so you have over the next week most of the big banks reporting, and so JP Morgan kind of kicked things off. And what I'm looking for is two things. One, after this big flush, what happens to JP Morgan? Does it soak back up and kind of shake it off, and this is just kind of a one-off thing? Or does this try to rally back up, stuffs, and then stays heavy, and then you have that failed follow-through, connect the dots of the key levels trending down? And so I want to see, how does this react after the initial flush? And then I'm going to be looking to the rest of the names to basically see, are they going to be doing the same thing, where it's regardless of if they have decent earnings or bad earnings, they're going down in either case. And then you could basically have the entire index get dragged down from that, and that's that XLF index. And that's one of the things that I look at every day when I'm getting a read on the market, because it's such a large component of what moves things like SPX or SPY. Large tech and things like financials, they're huge movers of that. So that's definitely something I have on watch for this week. And if the markets are bearish or if things are trending down, then this could be a path of least resistance kind of sector where it's already trying to go down. And if the market's going to help it along, it's just going to be a very smooth ride, as opposed to something that's I'm fighting or very difficult. So I'll definitely be watching the bank trades. And then the next thing I have on watch is FCX. Had some really nice moves in this over the last few weeks. It's been on watch for a while with the commodity space, copper rallying. And so this had a nice run up, and then it had a big flush on Friday, which I actually think Nate was able to do. Maybe he attempted to do some put trades on it, but he might have missed his fill. But he had the right idea, where, again, just like large tech or just like the AI names, you could have something trend really well and have a long-term bullish trend, but it can get a little bit ahead of itself and then have that sharp day. But that doesn't necessarily mean it's bearish. It's just kind of an unwinding of some positions, and then it can continue back up. So we'll see. If it tries to test back up and stays weak, maybe you have a trend change. But if it starts to grind back up and every dip gets soaked, then you have a continuation of that trend. So that'll be on watch for possibly calls. And then GDX, we have the gold theme, same idea as FCX. You basically just have a good trend. You have a sharp pullback, just like you saw in SMCI and in NVIDIA during the earlier parts of the run-up. Just an unwind day with the market, or with option positioning, or with just weak hands that are kind of built up along the way and they get flushed out. So the next thing I have on watch is NVIDIA, so NVDA. And so thoughts from a couple of weeks ago was that after kind of like the NVIDIA AI day, that was a time where you might see some consolidation, or you might see some separation between which names are moving well and which names kind of are getting stalled out. And so NVIDIA's on watch. I think if it might continue to consolidate, but if it starts to act strong again, then that could be a leader, along with things like MU. That could be another leader in the space. And so, just like we look for in failed follow-through setups, where you have that, kind of range where it's testing above and then it can't break that and fails below. If you get follow through, then it's that same process. It looks the same to start with, but then you start to have higher lows and it starts to break above that upward range. And so if the market is strong and if those names look strong, then those could be go-tos, as opposed to something like AMD, which is in the sector, but it has relative weakness. And part of that is because China announced that things like AMD and Intel, they don't want to use American companies, or basically foreign companies in China, because they don't want to be reliant on them. And then also they could have potential access to sensitive data. So AMD and INTC both got hit on that news. And so those could be names for puts if the market is weak and the sector is weak. And then we have things like Meta. So it had a nice run up over the last week. And then midweek, when the market started to get weak, Meta had a pullback along with it. So I want to see if the trend either reverses and breaks down, or if it soaks and starts to build higher. And then that would be a name I would look to for potentially calls again. And then, like Stan mentioned earlier, CVNA, this is on watch. So been watching this name for a while, and I want to see if this is just testing the lower end of that range, or if the market starts to get weak and we have a real pullback, then things like this should not be at these levels. And so I think that this could be a huge unwind. And that's why you don't have to rush into it, because it has so much range if it actually does unwind, that it's better. Like the second mouse gets the cheese. Like, don't fall for the trap. Every time it looks like it's breaking, it swipes back up. Let it fail and then come back up, and then fail that retest and then come back down. And so, patience pays in situations like that. And you also can have a view that's a couple of weeks out. It doesn't have to be right necessarily that week, especially on the options side. So those are a couple of things that I'm watching. And like I mentioned earlier, if options or if the large names are kind of in that chop zone from that, the VIX building up and then slowly unwinding, if it's too difficult, then I want easy trades. I want clear, easy, high probability, high reward, low risk trades. And wherever I can do that, I will do that. So whether it's options, large caps, small caps, I have experience in many different types of markets. And so I'll just basically look to see what's moving well, and that's where I'm going to adjust my strategy. So that's basically all I have on watch for the week. Stan, do you have any closing comments before I remind people to like and subscribe?
Yeah, I mean, I think we've covered a lot of decent topics today, Chris. As far as my closing comments, that would be something similar to where we're in a market where it pays to not be stubborn. If you see something, if you know you're good at something, if the opportunity comes into your wheelhouse, take it, no fear. However, if it's not working, you have to be just as disciplined to cut it, no fear, and then look on for the next opportunity, as it is literally just around the corner.
Absolutely. And yeah, I'll be relying on you and Nate and some of the other guys in the room this upcoming week, and we'll see if I'm playing with you guys in small caps. So thank you for joining me again on our Sunday Stan session. And I hope that everyone has a great week, and leave either questions or your key takeaway in the comment section for a chance to win a t-shirt. And we will see you all next week.
Great. Thank you, Chris. Have a good day.
You too.